Good morning, friends. Hope you're all doing great. Today we shall be on the concluding our income tax section. Now today is the last class for our income tax. So I'll be telling you the last topics which are left and also very important amendments which have been brought forward with the new Finance Act, which will be applicable for you if you're sitting from your June 2017 onwards exams. So please make sure that whatever we have done till date, of a few of the figures are going to change if you're going to sit for your exam from the June 2017 onwards up till March 2018. So very important chapter today, very important session today. Make sure you are well concentrating and making your important notes for the amendments that are brought through. Now before we begin with the amendments, let's finish off with the last section of our income tax with the other matters which are remaining with respect to income tax. Now, one very important thing is that what is the status of one person? How do you decide the status of a particular assessee? That the particular assessee is an employee or is the particular assessee a self-employed person? Well, outrightly, the distinction between the two is quite obvious. It's quite easy as well to make. If you're employed by an employer, you're definitely an employee. If you work for your own self, you're definitely a self-employed person. However, there can be little confusion. There is going to be ambiguity for people who are doing mixed sort of roles. For teachers, lecturers, musicians, doctors, now they can come under both categories. Categories of being employed as well as categories of being under self-employment as well. So very important that we should be able to determine what is the exact tax status of the assessee. Why? Because obviously the applicable rules are then going to follow through. So let's have a look where it's quite easy to distinguish between the two. However, difficulty may arise when dealing with persons engaged on a subcontract or freelance basis to provide personal services. Examples: musicians, actors, teachers, lecturers. All of them can fall under both the categories. They can either be a self-employed person or they can be employed by a employer. So definitely there is confusion for such roles. What else? What do you do for these people? As an individual, if I'm coming here teaching you a subject, I can be both. I can either be a self-employed person wherein I'm doing my freelancing work at various institutes, or I can be employed by this particular institute as well, thus making me an employee of this institute. So very important that you will be able to distinguish that what is the exact tax status of a assessee, so that the income tax is calculated on the according provisions of the applicable assessee. Now, as an individual, I would like to retain my self-employed status. Why do you think I would like to do that? Definitely because if I'm a self-employed person, I can go ahead and do the similar kind of work with other affiliated institutes as well. As well as there is no fixed timing, there is no binding on me. If I'm an employee, definitely I have to follow certain protocols. I have to follow what my employer is asking me to do. I have to follow the techniques, the provisions, the laws of the employer. So as an employee, as an individual, I would like to retain my self-employed status. However, on the other hand, the HMRC, that is the income tax department, on the other hand, would want me to continue to be a employee. Why do you think that is going to be there? Obviously, because it brings in a lot of benefits for the HMRC. If I am assessed as an employee, first thing that my tax is going to be deducted under the pay as you earn scheme. So the employer deducts the tax, gives out the rest of the payment to me, and the tax immediately gets submitted to the HMRC. So definitely it's less cumbersome for the HMRC. They do not have to chase me on an individual level just for to be able to collect my taxes. So definitely HMRC would want me to be a employed person. However, I personally would want to be self-employed. Right? So let's have a look at how this confusion occurs and how do we actually resolve this confusion. So such persons would want to keep self-employed status. Why? Because they do not have contracts of employment, are hired to provide a specified service with no certainty of getting repeated work. Today I may be replaced by anybody else here. Why? Because I'm a self-employed person. If they do not like my work, they can very easily replace me. And there is no guarantee that I'm going to get repeated work here in this institute. Why? Because definitely I'm not a employee here. I'm a self-employed person and are paid against the invoices submitted. So after the end of every session, I submit an invoice to the institute and they pay me for that. So definitely that makes me a self-employed person. What else? Why do you think, on the other hand, HMRC would prefer me to be a employee of the institute and be categorized under the employee status? Why? Because definitely it generates more national income, national insurance contributions for the HMRC. So generates more NICs. Let me just grab my pen. Generates more NIC for the HMRC. Why? Because the employer is now going to pay class 1 and class 1A, and the employee on the other hand is going to pay class 1 and class 2 himself. So definitely a higher collection of national insurance contribution if I am assessed as a employee. What else? It also reduces the risk of income tax evasion. Why? Because now my salary is getting deducted at source itself under a pay as you earn scheme. So it gets deducted at source itself. It makes it more difficult to claim allowable expense. Why? Because definitely now I'm an employee, I can only claim a certain portion of allowable expenses under employment provisions which I am allowed to claim back. Also, it makes tax collection cheaper for the HMRC. Why? Because the tax is being deducted at source itself and the remaining only gets paid out to me. So definitely I personally would want to be categorized as a self-employed person, whereas the HMRC would want to categorize me as an employee because it is a whole lot easier for them then. Now let's have a look at when this confusion occurs, how do we actually resolve this confusion? How do we actually decide whether the status of a particular musician, technician, employee, whether a person, a doctor, nurse, what is the particular status of a particular assessee where there is ambiguity between the two roles of self-employed and employment. So definitely we need to ask ourselves a few questions in order to resolve whether my status is employed or is it self-employed. Now, can you send in a substitute? Definitely, if I am a self-employed person, I can send in a substitute as opposed to supposingly I'm an employee. Do you think you tomorrow at work you can send in somebody else to do your work instead for a day? Definitely not. Only self-employed persons can send in substitutes and not employees of a company. So definitely this is the first question you can ask yourself in order to resolve whether a particular assessee is self-employed or is a employee. Also, does the person for whom you are working have control over your work and the way in which you do it? Now, this question again is going to go both ways. It can be applicable for employment as well, and it can be applicable for self-employed as well. More or less, self-employed persons would carry out work as it suits them, as opposed to this employed. If you are, you need to work as your employer asks you to work, as for the timing the employer asks you to work, in the style the employer asks you to work. So definitely another distinction between self-employed and employed persons. What else? Do you work a set working pattern, that is working fixed number of days per hour? Definitely yes for employees, but not applicable for self-employed person. I do not have a fixed pattern. I can come in any day and do my work. As opposed to this, if I'm employed, there is a fixed number of hours, 9 to 5 every day. I have to be at work and perform my duties of employment. What else? Are you paid a fixed per hourly, weekly, annual rate? Most probably, definitely, there is a fixed remuneration for employees. Now, on the other hand, self-employed person may not have a fixed remuneration, which they are going to definitely withdraw on a per hourly basis. What else? Do you receive bonuses or overtime? Definitely yes. If you're an employee, you would be entitled to receive overtime. You will be entitled to receive bonuses. However, if you are a self-employed person, you may not be entitled to receive bonuses or any extra payment for the overtime work that you have put in. Why? Because this is your own work, your own business, you're self-employed. So who is there to give you any extra bonuses? Do you bear the financial risk of unsatisfactory work? Today, as an employee, if I'm not performing well, I perform some blunder in the calculation. Who is going to bear the financial risk? Definitely the employer bears the financial risk. As opposed to this, if I'm a self-employed person, I bear my own financial risks as well. So definitely if I'm self-employed, I need to bear my own set of risks as well. What else? Do you provide the plant and machinery necessary to do the work? Definitely yes, for employment. Obviously, you come into work, the employer gives you the necessary hardware, software, everything for you to be able to perform your job. Not true for self-employed persons. They may need to be required to carry their own set of equipments. Doctors need to carry their own stethoscope, their own medicinal boxes. Teachers need to carry their own laptops. Definitely varies for employed and self-employed people. What else? Would work normally be quoted on a fixed price regardless of the number of hours it may take? Now, as an employee, once you've been assigned a job, you need to finish off that job regardless of the number of hours it requires you to put in for the particular job to be completed. As opposed to this, self-employed person also, I need to finish off this job. I don't know how many hours it is going to take me, but I need to finish off this job. If I'm an employee, I can claim for my overtime work which I have put in. But however, if I'm a self-employed person, it's my business, it's my work. I do not get paid any extra overtime for the amount of quantum of extra work that I put in. What else? Do you decide the timetabling for carrying out jobs? Definitely, employers tell the employees how and when a particular job needs to be done. On the other hand, what happens when you are an employer, you're a self-employed person, I can decide my own schedule as to how I am going to work my work around. So definitely I can vary it, I can alter it the way I wish to. What else? Do you have to correct unsatisfactory work in your own time and your own expense? Definitely, if you're an employee, you've goofed up something, you will be expected to put in extra hours of work and correct it. Similarly, for self-employed people as well, if I've done something wrong, I need to mend my work as well. So, in order to move ahead with the work. Do you work for a number of different customers? Now, very one simple example is that if I as a lecturer is a self-employed person, I can go to 5 other institutes and teach the same subject. As opposed to this, if I'm an employed person, I cannot go to any rival institute and teach the same subject. So definitely, whether or not I have a lot of different customers determines if I am employed or I am self-employed. Now, all of these questions, all of these badges of employment we've done, let's sum this up in a few tests that you need to ask. You need to ask yourself in order to determine your tax status, whether it is going to be determined as an employee or as a self-employed person. So let's have a look at the tests for consideration of considering whether you will be employed or you will be self-employed. Now first let's have a look at the first test of consideration, which is the obligations test, which means that as an employee, I have certain obligations fulfill. It is my job. I am obligated to perform this particular job at a particular time. However, as opposed to this, if I'm a self-employed person, I can work my way around the way I like. So definitely there is no obligation for me to perform a particular job at a particular time. So definitely I can move around with my obligations. What else? The similarity of work test. If I'm an employee and I'm working for a department, most likely the other 5 people in my department would also be performing similar tasks. So definitely as an employee under each department, all of us are expected to work in coalition with each other. Why? Because we're all performing the similar tasks. We're all performing same type of tasks in order to fulfill a particular task. Now, as opposed to this, if I'm a self-employed person, I come in here, record my classes and go out. I'm not concerned with anybody else that how they are performing their own similar tasks. Even though they are performing similar tasks, my work is not dependent on anybody else. So definitely I look at the similarity of work test done. What else? The exclusivity test, which basically means that how exclusive is the work which I am doing. Am I obligated? I'm being signed an exclusive contract by my employer, which basically means I definitely can only work for one employer at a time. As opposed to this, if I'm a freelancer, I'm a self-employed person, I can perform the same task at 5 different institutes. Why? Because there is no exclusivity of my work. I'm a self-employed person. I'm not obligated under any contract of employment. What else? The uninsurable risk test, which means that there are a few risks against which you cannot insure yourself. These are known as the uninsurable risks. Now you're going to check who bears the risks of these uninsurable risks. Does the employer bears the risk? So definitely you are an employee then, or if you yourself are bearing the risks, then you may look like a self-employed person. So definitely you can perform these 4 tests in order to assess whether a particular assessee is going to be categorized for a particular tax year as employee or as a self-employed person. So very, very important that we be able to perform these 4 tests of consideration. Now let's understand this with the help of an example so that we know how in the exam we need to study the facts of the case and filter out information based on the test for consideration and conclude what is the status that the HMRC is going to conclude for a particular assessee for a particular tax year. Right. Let me just quickly grab some water, please. Right, so employed or self-employed. Hans Starman, a self-employed musician, has recently accepted a contract as a backing musician for a band, Space Mirror. So you were a self-employed person previously, but now you've accepted a contract as a backing musician with a band, Space Mirrors, for their upcoming tour of the UK. The tour commences on the 1st of May 2016 and will end on the 31st of January 2017. 6 concerts a month will be played over the 9-month period. Hank being paid £1,000 a concert with all his accommodation and travel costs being fulfilled by the band, which trades through a limited company. While contracted to the band, he will use his own instruments and other equipment but will not be able to perform work for other employers. In the previous tax years, Hank has consistently carried out a variety of assignments for different employers and he expects this to be the case in the other months of 16-17 as well. Explain with reasons whether or not his contract with Space Mirrors Limited will alter his tax status from self-employed to employed or not. So very well, we've got a case study. We need to evaluate whether this particular person, Hans Starman, will be categorized as an employee for 1617 or will be categorized as a self-employed person depending upon the tests of consideration. So let's perform the tests of consideration. We need to perform the tests of consideration. The first test of consideration is what? The obligations test. The obligations test. Now, very clearly, you've been told that you need to perform 6 contracts, 6 concerts per month for 9 months. So, your obligations are very, very clear. They are fixed. You know what exactly you need to do, what you're obligated to perform. So, very well looks like a employee by the obligations test. So, looks like an employee. Let's have a look at the other test of consideration being the exclusivity. Now, very clearly it says, but will not be able to perform work for other employees. So, definitely an exclusive contract. So, definitely you make exclusive contracts with your employer, not if you are a freelancer. So, definitely looks like an employee from the second test as well. Let's perform the third test now, which is the similarity of work done. Now, for similarity of work done, we are now Tom Hanks. What is this? Hank Starman is now a part of the musician group. So definitely there will be other musicians also performing similar kind of tasks. So you are now a part of the group where everybody is doing the same kind of work, is obligated under the same set of terms and conditions. So very well, you definitely look like a employee here. What else? The fourth test being the uninsurable risks. Now the question also clearly tells us that the accommodation and travel cost is going to be funded by the band. So come tomorrow, supposingly there is a natural calamity and the concert is not able to take place, who is going to bear the risk? Definitely the band itself is going to bear the risk, not each musician separately. They will still get paid whatever they have been contracted for. So definitely the uninsurable risk is now being borne by the limited company which runs the band, which is Space Mirrors. So definitely looks like an employee under the uninsurable risk as well. So we can conclude by saying that by looking at the facts of the case, it looks like HMRC is going to determine that the status of Hans Starman for the year 1617 is very well an employed person of a company known as, what is the company's name? Not given, just a limited company. So very well, this is how you're supposed to solve the question in the exam if you're given a question to bifurcate between employment and self-employment. You need to tell the badges of employment and conclude by giving the tests of consideration. So perform these 4 tests of consideration and conclude by saying what is your tax status. Now what else? Let's get back to the questions. Let's get back to the rules. Now, employment versus self-employment is done. There is another last part of your income tax left, which is known as the cash basis for small businesses. Now, remember, you prepare your books of accounts on a accruals basis, which basically means regardless of whether the payment has been paid or not, received or not, you're going to recognize what should have been done in the 12 months period. However, consider if you're just a small business, you've literally just started to trade, definitely you've not got too complicated a business, you're a small business, so the HMRC allows you to prepare your accounts on a cash basis instead of following the normal accruals basis of accounts. Now, cash basis, very, very simple. You only take into account what physically has moved in and out of the organization. So, what do you take? You take physical inflows of cash and you take physical outflows of cash. So, very simply, this is what you need to remember on the cash basis, that if it's a small business basically means business whose turnover is less than the threshold level of 83,000 pounds. Bear with me, this needs to be changed. It's 83,000 pounds for 16-17 now and 166,000 pounds for 16-17. Like these, I need to make a few more amendments in your income tax, which I'm just going to tell you as soon as I finish off with this cash basis for small businesses. So what do we have now? From 13-14 tax year, small businesses can use cash basis instead of the normal accruals basis for calculating taxable profits in self-assessment return, available to sole traders and partnerships with income of less than 83,000 pounds, and you may continue till you reach the threshold level of 166,000 pounds. Then you convert to normal accounting for subsequent tax basis. So very well, this is your cash basis, wherein you're not taking into account the normal accruals basis of accounts, but only taking into account the cash basis, which is you're taking into account cash receipts and you're taking into account the cash payment. So what physical movement in liquid cash has taken place in the organization is what you're going to consider while preparing your books of accounts. So basically what it means, income and expenses under cash basis means, what about income? Income actually received in the tax year is going to be recognized. Why? Because this is income which has been physically received by the organization. Expenses only deducted if they have been paid in the period. So what about expenses? You deduct them if they have been actually paid in the period of account. No adjustment for changes in inventory, debtors and creditors. Why? Because they are not cash. If they are not cash, you cannot adjust for them while preparing your books of accounts on a cash basis. Inventory is your finished goods which have not been converted into cash sales as well. Because they are not converted into cash, you do not consider them while preparing your books of accounts. Debtors, similarly, these are credit sales, sales which have not converted into cash as yet. So definitely you're not going to consider them. Also, creditors, these are credit sales. So these are credit purchases for which you haven't paid your suppliers as yet, because the physical payment of cash has not been made. You're not going to consider them while preparing your cash flow basis of accounts. Interest paid on cash borrowings is allowed up to a maximum of 500 pounds in the year. So this is how you need to consider, you need to understand, this is how we prepare the cash basis of accounts. Only cash receipts and cash payments are going to be considered while you're preparing your accounts. Now, what happens for capital items under the cash basis? Generally, capital items enjoy what? Capital items would enjoy a capital allowance. However, now because you have a cash basis of accounts, you need to find out, you need to simplify your expenses. The entire expense of these plant and machinery that you bought, except for motor cars, you can basically just claim it as a trading expense and the year of purchase itself. So capital items such as machinery, computers and vans used in the business are treated as trading expense, and you're not claiming capital allowances on these purchases which you have made. When they are sold, definitely something comes into the organization. Cash is being received. Cash received is treated as income. So definitely very simplified income and expensive. As soon as you bought the asset, you laid out cash, claim it as an expense. When this particular asset is subsequently sold off, you receive cash. At the time you receive cash, claim it as a income. Now also apart from these capital items, what about motor cars? On your motor cars, you can claim a flat rate expense is claimed on motor cars. So remember the rule is except for motor cars, you have a flat rate. Now, what do you think is the apparent advantage or disadvantage of using this cash basis of preparing of accounts? Definitely, you're preparing cash, you're preparing your accounts on a cash basis, which basically means it's a very, very simplified way of preparing your accounts. You need not have huge, humongous cost in terms of your accountant, your accounting softwares. Why? Because all you're taking into account is the physical movement of cash in the organization. Cash receipts versus cash payments is what is being compared here. So advantage is that cash basis is entirely voluntary, which means that if you're a small business below the threshold level, you can choose to be preparing your accounts on a cash basis. It is not compulsory but entirely voluntary upon you for you to be able to prepare your accounts on a cash basis. Also, cash basis is simpler in the sense that all you're taking into account is cash inflow and cash outflow out of a particular organization. Cash basis is less likely to suit businesses with what? With losses that have significant interest expenses or that already have more sophisticated or complex accounting systems. So definitely you are looking into a basis of accounts which is a whole lot simpler. You do not have complicated accounting systems. You need not hire an accountant. You can just prepare your inflow and outflow based on the cash which has flowed in and out of the organization. So now what about cars? What are the simplified expenses that we're going to take for cars? Mileage, first what we take, business cost of vehicles is taken at a flat rate of 45 pence per mile for the first 10,000 miles and thereafter at 25 pence per mile thereafter. So very, very simply, you are taking a very simplified expense for the purchase of the cost of the vehicle. You are taking it at 45 pence per mile for the first 10,000 miles. Thereafter at 25 pence per mile. Now what happens if you're using your business? You're using your business premises as home as well. So you're making a dual purpose of your business premises. So definitely some amount of expenses should not be allowed to be claimed from your business. So what do you reduce from it? You reduce depending on the business use of home, depending upon how much you've actually put in is what you're going to claim. A monthly flat rate expense of £10 per month if a minimum of 25 hours have been worked in from home per month, and this further increases to £26 per month if the work from home exceeds 100 hours per month. So very, very simply, all you need to do is consider how much time you have actually put in preparing your accounts. Also, let's have a look at the private use of business premises as home, which basically means in your business premises, you're actually living in your business premises as well. You're using it as your home as well. So what do? Definitely some amount of the consumption of the expenses would not be allowed as a business expense. How much? Depending on how many people are actually using this particular residence at this particular business premises as home. If it is one person, you deduct £350 for one person. If it's two-person, you deduct £500 for the two-person. If it's three or more people, you deduct £650 for three or more individuals. So very, very simply, very simplified set of expenses. All you need to look at in the cash basis is how much has actually been cash spent or not, and there are a few flat rate expenses which you can claim while you're preparing your cash basis of accounts. Now let's have a look at an illustration in order to better understand this. Gillian runs a guest house and lives there the entire year with her husband Jonathan. Their daughter Sophie is away for 9 months of the year but returns home for 3 months of the summer. So basically there's a business premise being used as home by 2 people for 9 months and by 3 people for 3 months. So very simply what you're going to do, you're going to claim the flat rate of expenses for the business use of this, for using this private use of the business premise as home. For 2 people it is £500 per month. So it is £500 per month for 9 months, plus it is £650 if 3 or more people use it. So this is the amount that you can claim, totaling how much? £6,450, which can be reduced from the business, that the business expenses of £11,550 that you were otherwise claiming from the business premises. Very simple use of illustration. Now let's finish it off by doing an example. Let's find out whether or not cash basis is actually beneficial for small businesses or not. Let me quickly grab some water, please. Right. So David started a web design business on the 6th of April 2015. The following information is available for the year ended 5th of April 2016. Turnover was £68,000. Debtors at the end were 5,000 and 1,000 was written off during the customer becoming bankrupt. Now very simply we know that accruals basis recognizes debtors. However, on a cash basis there is no such thing as debtors. Why? Because they are not cash sales. Office rental cost £1,200 per month. 15,600 was actually paid during the year. So even if it was 1,200 multiplied by 12, 14,400 for the entire year, the physical layout outlay is how much? 15,600. So this is what you're going to reduce in your cash basis. In April 2015, David purchased a car with CO2 emission of 140 grams per kilometer for £18,000. So definitely there is a car which is being purchased, and this car you're going to claim a flat rate for your cash basis, and on the other hand you can claim capital allowances if it is a accruals basis of the preparing of accounts. Motor expenses were 2,800 in total. David drove 10,000 miles, of which 30% was for business. So business use is only restricted to 30% of the total 10,000 miles. So 3,000 miles is for business purposes, 7,000 miles is for private purpose. Office and computer equipment costing £9,000 was purchased at the start of the year. Now this is a new office and equipment ideally eligible for annual investment allowance. So definitely yes, if you're preparing your accounts on a accruals basis, but not applicable the entire £9,000 you reduce if you're preparing on a cash basis. What happens in the year of purchase, except for motor cars, the entire amount is claimed under your cash basis. What next? Other allowable business expenses amounted to 6,000, out of which £400 was still unpaid at the end of the year. So very simply we have to calculate on a cash basis and on a accruals basis. Let's first start with preparing on a cash basis. When I'm preparing my books of accounts on a cash basis, what do I take into account? First, I take into account revenue. Revenue is going to be what? Revenue is £68,000 turnover. However, 5,000 is debtor, certainly not recognized under cash basis, and write-off needs to be written off. So 62,000 pounds of revenue is there. What next? You reduce your expenses. The first expense being office rental. On a cash basis, how much have you actually spent? You've spent 15,600 was paid in the year. Very well. What next? In April 15, David purchased a car with CO2 emissions of 140 grams per kilometer for 18,000 pounds. So you're only going to claim mileage of it. Mileage, that too at a flat rate of business use. Business use, out of the 10,000 miles, 30% is business. So 3,000 pounds, 3,000 miles, you're going to multiply by 45 pence for the first 10,000 miles. Comes out to be, forgot to put on an is equals to mark, 1350. Very well. Right. Up next, there is equipment being purchased. If equipment has been purchased, you've actually given physical cash in order to purchase this equipment for 9,000 pounds, because cash has been gone out. The entire 9,000 pounds can be claimed in the first year of purchase itself. What next? Other allowable expenses is 6,000, of which 4,000 is unpaid. So other allowable expenses is how much? Out of 6,000 pounds, you got 400 still unpaid. So 5,600 is what you can claim. So on your cash basis, what is your trading profit? $30,450 is what is your profit, is what is your net profit. Sorry, something wrong. 400 was unpaid. How much did I reduce? Because 400 was unpaid, so definitely yes. 5,600 is what you need to reduce. Now this is cash basis. Let's find out on an accruals basis as well. Start off with revenue again. How much revenue you're going to recognize? Under accruals basis, you definitely recognize your debtors. So only write-off is going to be reduced. 68,000 pounds minus a write-off of 1,000 pounds. What next? What about? You start with office rental. How much is the rental? 1,200 per month. Accruals basis, you're going to recognize whatever is due regardless of whether there has been an overpayment or there has been a underpayment. What next? You've purchased a car. On the car, you're going to claim what? You're going to claim capital allowances. Capital allowance, it's a high CO2 emission car. So it's going to be 18,000 multiplied by 8%. Multiply by, this is business uses only 30%. So 432 is what you can claim as capital allowances on the car. Also you can claim capital allowances on the motor and office and computer equipment that has been bought. You can claim the entire 9,000 pounds as AIA of your capital allowances. Why? Because it's in the first year of purchase itself, except for motor cars. What else is there? Car is done. Motor expenses is what we need to consider. 2,800, out of which 30% is only the business use. So definitely only 30% is what I can claim as my motor expenses. Office and furniture I've done. Other allowable business expenses. Other allowable expenses. How much they are? Other amount, like expenses amounting to £6,000. Thereby, what is your net trading profit? 36,328. So by following your cash system, definitely you're now liable to pay less amount of income tax because your taxable income is lower as compared to your taxable income when you're following the accruals basis of account. So definitely preferable for small businesses to use the cash basis of accounts and thus delay the payment of tax and also simplified use of accounting. So definitely this is why, this is how your cash basis of accounting kicks in. That brings us to an end of your session for your capital, for your income tax as well. Absolutely any queries you have, you can always email it to me at Shilpi ACCA@gmail.com. Now that we've done this, let's quickly, without wasting any time, move on to the very important topic of amendments to the Income Tax Act applicable for the tax year 16-17. Right? So what we need to do, we're now looking at the amendments which are going to be applicable to you if you're sitting for your exam June 17 onwards. So if that is the scenario, there are a few changes to what we had done in our previous sessions that you need to consider while you're preparing your set of accounts. The first being that there is a change in the tax slab rate, that is the basic rate, the higher rate, the additional rate for income tax that we've done. The basic rate slab is now finishes at £32,000 instead of the earlier £31,785. So does your dividend slab for the basic rate changes to 7.5%. Also changes is your beginning threshold level of the higher rate tax fund comes out to be £32,000, £32,001. Also changes is your additional rate taxpayer rate for the dividend income to 38.1%. Now remember, this will be provided to you in your rates and allowances sheet. So if there is absolutely any confusion that you have, you can always refer back to your rates and allowances sheet. Remember, these amendments are applicable for the tax year 16-17. So if you are sitting for your exam June 17 onwards, these are the figures that you need to consider in the rules that we've done so far. Also changes the personal allowance to £11,000 for 16-17. So now personal allowance has been further notched up by another £400 and it has now reached 11,000 threshold limit. Now there is another thing that kicks in is taxation of dividend income, which basically means that dividend is now taxed at a lower rate of 7.5% and also dividends never deemed to be tax deducted at source. Dividends are no longer deemed to be paid net of 10% tax credit. So they are not tax deducted. This has been abolished. Instead, dividends are now treated as being received gross. So they are not received net of tax, but they are received gross. So that 10% escalation that we were doing is not needed to be done anymore. Also for individual taxpayers, you have a starting threshold level of exempt dividend income up to £5,000. So make sure you know these rules so that while you're doing your questions, you know what are the applicable rules to apply. So definitely the threshold level is £5,000 up to which you can enjoy an exempt dividend income. What else is there? Now there is also another new thing that kicks in. Remember your annual allowances? We were giving an annual allowance of £40,000 every year. With this tax year 16-17 is the introduction of this allowance known as tapered annual allowance, which basically means it is 40,000 limit of annual allowance needs to be tapered. You need to bring it down depending upon if you're a taxpayer of paying more than £150,000 of taxable adjusted income. This adjusted income for this purpose is what? It is total income less the loss relief, interest payments and gross gift and donation. So make sure that you are calculating this limit and you're finding out whether or not it is above or below the threshold level of £150,000. If it is so, you can need to taper your annual allowance. How do you taper it? You need to taper it by is reduced by £1 for every £2, which is above the £150,000 limit. However, the maximum you can reduce it, that you can bring it down to is £40,000 from is £10,000 from £40,000. That is the minimum of annual allowance that every individual is going to enjoy regardless of what is their income threshold level. Now what we did, it is we need to look at the adjusted trading income. Adjusted income. What is adjusted income? It is a total income from that you reduce any loss relief. You also add reduce any interest payments and reduce any gross gift aid payments and donations. And you add what? Any employer's pension contribution is what you need to add on to if there has been a change, if there is an adjusted income, and you need to find out what is the threshold level of the tax. Is it £150,000 above or low? So this is how you need to calculate your tapered annual allowance. Very simply, the 40,000 annual allowance which you have now gets tapered or gets reduced up to a minimum of £10,000 depending upon what is the level of your adjusted total income. Now remember your marriage allowance, you could transfer 10% to your spouse, 10% of your PA. Earlier the PA was 10,600, so I was transferring £1,060. Now that the PA has changed to £11,000, now I can transfer 10% of that comes out to be £1,100 for the applicable tax year, which is 16-17. Now also for property income, remember we had done a rent or room letting wherein there were a certain amount of exempt income if you were giving away a room in your principal private residence for rent. The earlier limit was £4,250 as being considered as an exempt income. However, this limit has now been revised and brought up to £7,500. So up to £7,500 you can enjoy a rent a room letting income exempt of any sort of income tax. What else? Now remember your employment income. We did 3 types of benefits. We did our benefits which are taxable. We need 3 types of benefits. Out of that, ancillary benefits were only taxable for P11D employees. However, with 16-17, there is no concept of P11D employees anymore. So basically, what it results into, absolutely that all the employees are now going to pay taxes on all sorts of cash as well as non-cash benefits that they receive. So no concept of P11D employees. Cash earnings from employment are assessed on all employees irrespective of the level of their remuneration. Also, non-exempt benefits are now also assessed for all employees. So basically what happens, ancillary benefits which were earlier only taxable for P11D employees, remember your 8,500 earnings test? that you need not perform anymore. Why? Because there is no further concept of P11D. Employee ancillary benefits are taxable for all types of employees. So definitely you need to consider the impact of the employment income. What next? What about vehicles and fuel for private purposes? There is also a change in the table. Bear with me a second. Let me just quickly grab some water. Right. So there are a few changes in your rates and allowances sheet which are already given to you. So you can just refer back to the most applicable table which will be provided to you. So what do? For your company cars, when you were calculating your manufacturer's list price and CO2 emission percentage accordingly, there is a change in the percentage. You can refer to the table given in your books or your rates and allowances sheet. Also, what about fuel for private mileage of company cars? The earlier the statutory mileage the base value was 20,100. Now the base value has been increased to 22,200 instead. Please remember these are very minor changes which have been brought through, but these are now applicable to you if you're sitting for your exam June 17 onwards for your F6, that is your taxation paper. What about company vans? For company vans, the limit has changed from £3,150 cash equivalent to £3,170 cash equivalent basis. What about fuel for private mileage of company vans? The cash equivalent is going to be £598 per year. So definitely this is your earlier limit. The earlier limit was 594. Now your limit is 598 pounds applicable for 16-17. Now another minor change. Remember when we were calculating our capital allowances, the capital allowances annual investment allowance we calculated at 500,000 pounds applicable for every year. Come 16-17, this limit has now been revised by the HMRC, and now the revised limit is how much? It is 200,000 pounds. Bear with me. Right, so the now revised limit is 200,000 pounds as your annual investment allowance instead of the earlier 500,000 pounds of annual investment allowance which you were allowed to take as an annual investment account in respect of your purchases on plant and machinery which were qualifying purchases. That brings us to an end of today's session. The important amendments to income tax I have told you. Remember, these are applicable to you if you are going to sit for your exam on taxation from June 2017 onwards. So please make sure that these amendments are incorporated by you. Most of these amendments will be provided to you in your rates and allowances sheet which is provided to you in your exams. That's it then. Any queries as usual, please email it to me at Shilpi ACCA@gmail.com. That's it then. Thank you very much.